Hello, hi, namaskar to all the viewers of this channel. My dear students, in the last session we have completed class 5, right? 4 we have completed. Now we are into the class 5 of this inventory chapter. In this particular session, I am going to cover two problems, my dear students. Problem number 7 and the problem number 8. Okay. So, okay, fine. Let me explain. Let me start the solution. Before starting the solution, you need to have a one separate page wherein you can write, you can mention the problem number 7. Fine. Shall I read? From the following information, ascertain the value of stock on March 2020. What stock we have to calculate? Stock on 31st March 2020 is question mark. Okay, next. A value of stock on April 2019 is given. It is a what stock? April 2019. How much it is? 7 lakh. Stock on 1st April 2019. It is an amount of rupees 7 lakh. From this we can say that the stock on March 2020 is nothing but closing stock question mark. This is the opening stock given to you. Now my dear student, get ready with trading account. We can understand, we can solve the problems under two methods I told you. One is by preparing the trading account method. Another is with the help of statement we can do it. Now, stock on 2019 is given, purchases is there, manufacturing expenses is nothing but the direct expenses, right? Sales is also given. Now see here, at the time of valuing the stock on March 2019, March 2019 is nothing but my dear student April 2019. क्या हुआ? A sum of rupees 60,000 was written off. Same similar problem that what we solved in previous two. Particular item which was originally purchased for 2 lakh. See, 60,000 already written off, but you have purchased for how much? 2 lakh rupees. Then how much balance left out? Out of 2 lakh, 60,000 was already written off. Then what is balance? 1 lakh 40,000. This is not yet written off. This is to be subtracted out of what? Out of your opening stock. Okay. Later on, what he is telling? And was sold for rupees 1 lakh 60,000. Oh, ये तो sold हुआ. So क्या करना अब? Sales को भी star mark डालना. Opening stock को भी star mark डालना. This 1 lakh 60,000 is to be subtracted from what? From the sales. Did you understood? From what we have to subtract? It is to be subtracted out of sales, my dear students. Fine. Shall we move on to the answer for this? Later on. The gross profit is 25% on cost. See, this is very, very important. The gross profit is given on what gross profit? It is on cost. In earlier two problems, it was on sales, but in this problem, it is on cost. Fine. So, let us start our solution from the beginning. We have to ascertain the stock on 21st March 2020. Opening stock is given 7 lakh rupees. So, you take to opening stock, you take 7 lakh rupees in the inner column. Out of this, what we have to subtract? Out of this, 60,000 was already written off, but originally purchased for 2 lakh. Now the balance is 1 lakh 40,000. Now it is to be written off. Less balance to be written off out of 2 lakh. 60,000 was already written off. Now we have to subtract 1 lakh 40,000. We are getting 5 lakh 60,000 in the outer column. How much it is? 5 lakh 60,000. Fine. Purchases during the year from April 19 to March 2020, 34 lakh 60,000. Leave one line and write purchases 34 lakh 60,000. Later on, We have a manufacturing expenses. It is of rupees, sorry, the alignment is missing. Manufacturing expenses is rupees 7 lakh. Fine. Then next, sales during the year is 52 lakh 20,000. Where to take the sales? On the credit side. $52 lakh 20,000. Out of the sales, how much we have to subtract? We have to subtract 1 lakh 60,000. Less, that is abnormal sales. 1 lakh 60,000 we have to subtract. After subtraction, we are getting 50 lakh 60,000. How much it is? 50 lakh 60,000. Please remember, we are getting an amount of rupees 50 lakh 60,000. Okay, fine. This completes all these points. Even this one also, this one also. Finally, gross profit is what percent? 25% on cost. Now let us write to gross profit 25% on cost. Please, my dear student, listen with a lot of interest. Gross profit is given on cost, but we have 50 lakh 60,000 as a sales. Please remember, please listen and look towards the first class explanation. Profit is given on cost, but we have an amount of sales. Okay, now what to do? In order to convert cost into sales, in order to convert, please remember, in order to convert cost into sales, what we have to do? We have to add the profits to the cost. In order to convert the cost into sales, what we have to do? We have to add the profit to the sales. In such case, profit is 25% on cost. Now, we are not supposed to take 25 by 100. How much we have to take? 25 by 125. Why we have to take 25 by 125? Because we have to add the profit to the cost. So, when there is a mismatch between the cost and sales, we have to take 25 by 125. Now, we have to write 50 lakh 60,000 25 by 125. Use a calci and work out. How much we are getting answer for this? It comes to rupees 10 lakh 12,000. Now you close. The total comes to 57 lakh 32,000. The difference is by closing stock as a balancing figure, it comes to 6,72,000. My dear student, did you understood why Sudhakara took 25 by 125? Because the profit is given on cost, but we have an amount of sales. That's why we have to do like this. Fine. This completes the 7th problem, my dear student. Let us move on to the 8th problem. Okay. Shall I read? From the following information, ascertain the value of stock on 31st March 2021. What stock we have to ascertain? March 2021. Problem number 8. Stock on 31st March 2021 is question mark. Fine. See the next one. Value of stock on April 2020, that is 28 lakh is given. Stock on 1st April 2020, how much? It is 28 lakh. So, with the help of this, we can say that closing stock is question mark, opening stock is given. Fine. Now, we have a purchases, manufacturing expenses is called direct expenses, It comes in a trading account. Sales is also given. At the time of valuing the stock on March 2020, it is nothing but 1st April 2020. A sum of 2,40,000 was already written off on a particular item which was purchased for 8 lakhs. See, you have purchased for 8 lakh, 2,40,000 is already subtracted, written off. Out of 8 lakh, 2,40,000 written off, remaining 5,60,000. This is to be subtracted from what? From opening stock. And these goods are sold for rupees 6,40,000. Now, this 6,40,000 is to be subtracted from sales. Put star mark for sales as well as for stock. Except the above transaction, gross profit margin, except the above transaction, gross profit margin is how much? Except above transaction, the gross profit margin is, it is hiding over here. The gross profit margin is, I tell you, it is how much? The gross profit margin is 1/3. The gross profit margin is, it is hiding in this particular here. Let me see here. Gross profit margin is how much? It is 1/3 on cost. How much it is? It is 1/3 on cost. Now we have to do the solution for this. Shall we start? Now we have to prepare with trading account. See, now the profit is how much? Now the profit is 1/3 on cost. 1/3 on cost. Okay, fine. Shall we start the solution, my dear student? See what happened here. We have a stock. How much it is? 28 lakh. So we will write to stock. Yav stock idu? Opening stock 28 lakh. Subtract what? Balance. How much balance we have to subtract? Out of 8 lakh, 2,40,000 is gone. 8 lakh minus 2,40,000 already written off. Balance is what? We have to subtract 5,60,000. It comes to rupees 22,40,000. Am I right? It comes to rupees 22,40,000. Then next we have a purchases 1,38,40,000. Very big amount. Two purchases. How much it is? 1,38,40,000. A very big amount, my dear students. Then next we have a manufacturing expenses. It is of rupees how much? 28 lakh. This is about purchases. This is about sales. 28 lakh is your manufacturing expenses. It is of rupees 28 lakhs. Fine. What happened? The sales is 2 crore 8 lakh 80,000. 2 crores 8 lakh 80,000. Subtract what? Sale of abnormal goods. Abnormal goods are sold for how much? For rupees 6,40,000. Subtract 6,40,000. It comes to 2 crores 2,40,000. Fine. Later on, what we have at the time of valuing the stock, everything is taken. Profit is 1 by 3 on cost. 2 gross profit, 1 by 3 on cost. 1 by 3 on cost means, use a calculator, 1 by 3 means 33.333 percentage on cost. See my dear student, the profit is on cost, but you have an amount of sales. Match or mismatch? There is a mismatch. Now what to do? You take the 2 crores, 2 lakh, 40,000 into 33.333333 by 133.33333333. You take maximum number of 3s, it comes to rupees 50 lakh 60,000. How much it is? 50 lakh 60,000. Now you close completely, it comes to rupees 2 crore 39 lakh 40,000. 2 crore 39 lakh 40,000. The difference is called closing stock, my dear student. As a balancing figure, it comes to rupees an amount of how much? Use a calci and work out. That is see how much we are getting. You take how much? 2 crores 39 lakh 40,000 minus 2 crores 2 lakh 40,000. It comes to rupees 37 lakh. This is the amount of closing stock. Did you understood, my dear student? The profit is given on cost, but we have an amount of sales. Since there is a mismatch, we have to work out 33.333 by 133.333. Okay, please make a note of these problems, which are very, very important for your CA foundation exam. Okay, thank you, take care, bye bye.